So hello, everybody. Welcome to part two of our video series where we're going to be going through and exploring how do we determine the cash received from the exercise of stock options. We're looking specifically at Meta Platforms, formerly known as Facebook. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2022 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So now what we're going to go through and do is to determine the cash we have received from stock options. And the reason why we're doing this, so what we're doing here for Meta Platforms is that we've determined by going through and looking at all of their financial statements since inception, right? That's not Mr. DiCaprio's inception, although it did come around about this time. No, this is essentially, we've looked at their stock compensation expense and its impact on additional paid-in capital. But at the same time, though, I need to be fair. And I have to be fair by saying, okay, if Tchaikovsky, if you're saying that they've recognized all this stock compensation expense, but did they actually receive that amount of money from the stock options? Because that actually should be reflected as we're going through. So let's go figure out and see how we can figure this out. So go ahead and take a look at the financial statements. Now, sometimes where we can go is if we look in the statement of cash flows, what we will see is we will see share-based compensation. Now, when we receive over here, when we do receive cash, essentially from our, basically when we do receive cash from our employees, we should be seeing an increase to essentially to our financing activities, because in our financing activities, this amount should be reflected, as a financing activity. Have we actually seen cash coming through? So as I look at this over here, we do see in the cash from in financing activities, taxes paid related to net share settlement of equity awards. Right over here, of $5,515 million repurchases of stock. That's not really applicable to us, because what we're more concerned with is we're really much more concerned with, and what's kind of strange is, I guess, when we're looking at this, why are they not showing treasury stock as a reduction? Interesting. Okay. That's interesting. Repurchases of Class A common stock. And I don't see 44 billion coming out as treasury stock. Interesting. Okay. Well, that's why we're here. We're here to explore. Okay. So as we take a look, oh, here we go. So this over here is issuance of common stock for settlement of restricted stock units. And so this is kind of giving us issuance of common stock for a settlement. However, that's not necessarily the same thing as cash being received. So let's go through and take a look to see if we can find some more information about the stock. So what we're going to go through and do is let's go through and take a look at over here. Let's see if we can go through and find some more information about the cash, if any, we've received as a result of employees offering their shares. Now, the one thing I do want to say is that sometimes over here, the share-based compensation expense generally consists of the company's restricted stock units expense. RSUs granted to employees are measured based on the grant date fair value In general, they vest over a service period of 4 years. Share-based compensation expense is recognized straight line over the requisite service period. We account for forfeitures as they occur. So what that kind of tells me is that they're not getting options per se. What they're more than likely getting are actually shares, but those are actually going to be restricted. So there may not be any cash coming into Facebook at all or to Meta platforms at all for this. So let's go ahead and take a look. We're going to go through, and usually what you'll see is in the 10K, you'll see different notes. The first note is generally going to be for, let's take a look. So note 1, summary of significant accounting policy. So this is usually when you're going through and doing a 10K, this is where you're leading off. So right over here, they talk about the organization, basis of presentation, revenue recognition policies, over here, cost of revenue, content costs, software development, income taxes, advertising expense, fair value measurements, accounts receivable and allowances, lease obligations, loss contingency, business combinations, goodwill, right over here, revenue, earnings per share. Okay. So this is their earnings per share computation. Okay. Leases and goodwill and intangible assets, liabilities, commitments and contingencies, stockholders' equity. Okay, so let's go through and take a look at this. So our certificate of incorporation, we have Class A, Class B common stock issued. We're authorized to issue 5 million of Class A and 4.141 shares of Class B. Holders of our Class A and are entitled to dividends with and whenever declared by our board of directors. I do not think they've gone through and declared any dividends whatsoever. Yeah, they haven't declared any dividends. The holder of each share of Class A common stock is entitled to 1 vote, whereas the holder is entitled to 10 votes. So this is how Mark Zuckerberg, because Mark Zuckerberg, I believe, is the majority holder of the Class B common shares. This is how he maintains control of the company and will never be able to get voted out. By the way, I do want to say something is that Facebook, when you look at how strong their company is, they can afford to make a lot of mistakes. And the reason is they have no debt. Of their total liabilities of 41 billion, their operating lease liabilities are 12 of it, which is not really a liability in my opinion, rather it's a disclosure. But when you look at this over here, they have a lot of cash on hand. They have marketable securities, equity investments. They have a lot of assets. And so Facebook can really afford to make really big mistakes if they do make mistakes. I know they've been getting a hard time for the metaverse, but again, this is a company that has a lot of resources. And if this whole metaverse fails, they can come back swinging because they have the capital to do it. So as we come back, I'm not touting meta platforms. I'm just making a comment based on the review of the financial statements. So coming over here, when we look at the common stock, so going back over here, we have Class A, Class B shares, and here we have our share repurchase program, basically authorized for repurchase under the program. We retired, so they don't have treasury stock. They just bought the Class A shares and they retired them. So they're not even planning on reselling them. They just retired them. So that's something to kind of go through and consider. So what they're doing is they're just buying the shares back and not holding them as treasury stock. They're just retiring them. So that's what they're doing. And I guess that's okay instead of paying a dividend, although you'd hear different thoughts on that. So share-based compensation plans. Our amended plan requires the issuance of incentive non-qualified stock options, restricted stock awards, stock appreciation rights, restricted stock units, and shares withheld are forfeited. Okay, so there were 116 million shares of our Class A common stock reserved for future issuance under the amended 2012 plan. Right over here. Okay. Okay, so you have unvested, vested, granted, forfeited. Okay, these are restricted stock units. Okay, 22.77 billion of unrecognized share expense. So again, as I'm looking at this, and when I look at when we go through over here, and we're looking at for Meta platforms, when we're looking for, we have these amounts that we're saying, okay, this, how much cash do we actually receive? Because the reason why I want this to note this, because if we do in fact have additional paid-in capital, in my opinion, it's legitimate if we've actually received cash. So based on what I'm seeing for the 3 years, I don't really see any cash coming in as a result of stock awards. Now, I might be wrong, but I'm based on what I'm reviewing, that's what I believe to be the case. So now let's go back over here and let's take a look at some earlier periods, and we can maybe see if we find anything. So going back over here to 2018, and let's go ahead and look over here. So do we have anything for 2018? Okay, taxes paid to net share settlement. So when they're giving their employee stock options, they're clearly paying the taxes on that as part of their plan. They're rebuying and retiring stock. Okay, so other financing activities, I guess that could be something, but I don't know exactly what that is. So let's just go ahead and take a look at our right over here. And again, it doesn't really appear to be that material. So let's come back over here. Now let's take a look for isn't this fun and exciting? We're actually looking at publicly traded companies. Okay, so let's go in our certificate. So right over here, share repurchase program. We maintain one share-based employee comp plan. Okay. Okay, so right over here. Okay, there's really doesn't seem to be any exercised here. Okay. Let's now go back to, let's go to maybe an earlier period. And let's see if we can find this over here. So again, I'm trying to go through and look over here from financing activities, and I really don't see any, I'm really not seeing anything here where the employees are giving cash to the company for equity, for stock. And if it is, it's de minimis. If it's part of these other financing activities, that's the only place where I could really see where this would actually be. So as I'm looking at this, I'm feeling not that it's going to be, I don't want to call it not applicable, but I don't think that it's going to be really a significant amount. So over here, okay. Okay, during the second quarter. Okay, share-based compensation plan. Okay, so the options. Okay. There were 83 million. Okay, here we go. This might be interesting. So let's take a look at this. Okay. There are 83 million shares reversed. Okay, so we're here. Okay. Yeah, again, I can't see no amounts are popping out at me. If you think that there's something I'm totally missing, please send me a message and leave something in the comments, because I'm don't want to say I'm at a loss here, but I'm kind of like, now as I'm like looking at this, I just don't think that there are any where I would see it of an employees exercising their options. Oh, wait a second. Oh my goodness. We have a winner. Look at that. Proceeds from the exercise of stock options. Wow. Isn't that exciting? Like, so we have 18 in 2014 and 26 in 2013. This is me accounting geeking out. Okay. So 18, boy, oh boy. 18 and 2014. I love it. And 26 and 2013. And I'm just going to go ahead and just assume that all of these are zeros, or that they're relatively immaterial. Okay. So, wow, exciting. Okay. So we got 18 and 26. So those are cash proceeds. Let's come down over here now to, at least we know that it exists, right? Let's now come over here and see what we can find. And let's go to our proceeds from the exercise of stock options, people. This is exciting. 17, 28, and 6. Wow. Okay. And then lastly, on our final one over here, and I think I pulled these from. Okay, so we're going to go to cash flows, and we got proceeds from the exercise of stock options. It's exciting. So in 2009, it was 9, and then in 2010, it was 6. Okay. So what we've now gone through and have done is we believe that we have gone through and determined the cash amount received from the exercise of stock options. So this was our next step right over here. And now if we look at this, and if we were to go through, and I'll save this for the next video, but our next step would be to go through and to determine the amount of any. So I want to thank you for watching. And if you have any questions, feel free to leave a comment below. The next video will be more of an exploration in terms of what to do with the data that we've just come up with. But again, I do want to thank you for joining me here today, and I look forward to seeing you on the next video. Have a great one.